Hey, this is Steve, your mortgage guy, and I used to believe that down payment assistance loans for homeowners was the wrong way to go. And why did I think that? There's a couple of reasons. One, the interest rate is usually higher than you can get on the open market. Number two, the down payment assistance isn't a gift. It's a loan at 0% interest that you don't have to pay back. And why is this bad? Well, number one, it's bad because the first loan that you get with these down payment assistance programs, the rate's higher. The second loan is sitting there and it stays there until you sell the house or you pay it off or you refinance, and then you have to include it in the refinance. The end result after a down payment assistance loan is that you're in debt that is equal to or a little more than the total value of your house. So I kind of thought, bad idea. Some customers still wanted to do them, so I would walk them through the process and get them the down payment assistance. And then I really became a believer in these when one of these clients came back, and I had called them because rates dropped and we were able to refinance their house, get rid of the mortgage insurance, and they ended up having almost $100,000 in equity. Now, these people were two kids, husband and wife, both spouses. They came in from another country. They both have two jobs. The kids are hard workers also. And they came in at this time refinanced with six figures in assets that they would not have had if they hadn't taken the bite to have a loan that's a little bit, it's not as good as you could get on the market if you had a little bit of money. These people had just enough for move-in costs. The seller was paying their closing costs. The state was providing the down payment assistance loan. And this was about 2 years ago that they came back to me for their second house, or for the refinance to remove mortgage insurance and everything. Now, they've just done a home equity line of credit. They've taken out about $200,000 from their house because now they have a lot more equity. And they're buying another house with the down payment from the loan on their first house. So their real estate portfolio is now worth way over $1 million. And it's because they took that first step to get that junk loan, the down payment assistance loan, which helped them to propel to where they are right now. They had a higher payment. They had to deal with that for a couple years. They came back, got rid of the higher payment by eliminating the mortgage insurance, and now they're using the equity in that house to buy their second house, which is really more their dream house. Their kids are super excited. It's in a great neighborhood. It's a beautiful, beautiful house in a nice area. Everybody's excited. If they hadn't taken that first step to get that first mortgage that was a little bit subpar compared to what they could have gotten, they wouldn't be buying this great house right now. That's why I'm a believer now. The down payment assistance loans, if that's what you need, let's go at it full bore and get you a house.